Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial guts of public companies. Today, we are looking at O'Reilly Automotive Incorporated with a funny little surprise in their stock split that is worth unpacking. Ready to decode the latest quarter. Let's jump right into this 10. Q report for O'Reilly Automotive Incorporated for the period ending the 30th of September 2025. Make sure you are subscribed and join our Discord community through the link in the description below for more unfiltered financial insights. Alright, so this is the official quarterly report, a look under the hood of O'Reilly Automotive Incorporated's financial performance. Let us start with the company's financial snapshot, the balance sheet. As of the 30th of September 2025, O'Reilly stood at a total asset value of over $16 billion. That is a hefty sum showing the scale of their operations. On the other side of the coin, their liabilities are also significant, reaching roughly $15.4 billion. What is interesting here is the shareholders' equity, which is actually a deficit of nearly $900 million. Now, this might sound alarming, but as we will see, it is not necessarily a sign of trouble for O'Reilly. Now, let us talk about the money coming in. For the 3 months ending the 30th of September 2025, O'Reilly reported sales of nearly $4.71 billion. That is an increase of 8% compared to the same period last year. For the first 9 months of the year, sales reached over $13.3 billion, a solid 6% increase. This growth is driven by a 5.6% increase in comparable store sales for the quarter, meaning their existing stores are performing well. They also opened quite a few new stores, adding 55 net new stores in the quarter and 160 for the year so far. They are really expanding across North America. Moving down the income statement, we see their gross profit. For the quarter, it hit $2.44 billion, representing 51.9% of sales. This is a slight improvement from last year. For the 9 months, gross profit is over $6.8 billion, also showing a slight increase in margin. This indicates they are managing their costs of goods sold effectively, even with rising inventory acquisition costs. Now, the cost of running the business, selling general and administrative expenses, or CNA, also went up. For the quarter, it was $1.46 billion, about 31.1% of sales. For the 9 months, it is $4.26 billion, or 31.8% of sales. This increase is linked to supporting more stores and increased sales. But also, and this is important, broader inflationary pressures, particularly in insurance costs and compensation. So, with those sales and expense numbers, what is their operating income, the profit from their core business before interest and taxes? For the quarter, it is a strong $976 million, a 9% increase. For the 9 months, it is $2.63 billion, up 5%. This shows that despite rising costs, O'Reilly is effectively translating sales growth into operating profit, and the bottom line, net income. For the quarter, O'Reilly pulled in $726 million, an increase of 9%. For the 9 months, that figure comes in at a whopping $1.93 billion, up 5% from last year. Their earnings per S-share, a key metric for investors, also saw a healthy jump. Diluted earnings per common share for the quarter were 85 cents, up 12%. For the 9 months, it is $2.25, an 8% increase. This is genuinely solid performance. Looking at cash flow is crucial for understanding a company's financial health. For the 9 months ending the 30th of September 2025, O'Reilly generated over $2.1 billion in cash from its operating activities. That is a decrease from the previous year, mainly due to the timing of tax credit payments. In investing activities, they spent nearly $900 million on property and equipment, up from last year. This is likely for expanding their store footprint and distribution network. Overall, investing activities used over $896 million. Financing activities show a significant outflow of over $1.15 billion for the 9 months. This is largely due to share repurchases, a common strategy for companies looking to return value to shareholders. Speaking of cash, their free cash flow, which is operating cash flow minus capital expenditures, remains strong. For the 9 months, it is over $1.2 billion. This indicates they are generating a lot of cash after reinvesting in the business. Now, for something interesting in the footnotes, in May of 2025, O'Reilly announced a 15 for -1 forward stock split, effective the 10th of June 2025. This means for every share shareholders owned, they now have 15. This is a common move to make shares more accessible to a wider range of investors. The company also adjusted its authorized shares to 1.25 billion to accommodate this split, reclassifying a part of their additional paid-in capital to common stock. Let us circle back to the balance sheet with a bird's eye view. Their total assets stand at a robust $16.2 billion by the end of September 2025. This asset base has grown from $14.8 billion at the end of 2024, showcasing expansion. On the liability side, accounts payable reached over $7 billion by September 2025. This is a substantial amount, reflecting their large purchasing volume. Their long-term debt is also a significant figure, amounting to $5.9 billion. The company has been actively refinancing and issuing debt with various senior notes due between 2026 and 2034. Specifically, let us look at their senior notes. As of the 30th of September 2025, they had $5.4 billion in senior notes outstanding. These notes have interest rates ranging from 1.750% up to a significant 5.750%. Diversified debt maturity is a good sign, but the higher interest rates on some of these notes deserve attention. O'Reilly also has a substantial unsecured revolving credit facility of $2.25 billion maturing in March 2030. Importantly, as of the 30th of September 2025, they had no outstanding borrowings on this facility. This gives them a lot of flexibility and a strong safety net. The company continues its aggressive share repurchase program. For just the third quarter of 2025, they bought back over 4.2 million shares for nearly $420 million. For the 9 months, they repurchased over 17 million shares for close to $1.6 billion. This is a consistent strategy to boost shareholder returns. Looking at their revenue stream, sales to do-it-yourself customers accounted for $2.3 billion in the third quarter. Meanwhile, sales to professional service providers were slightly higher at $2.3 billion. This dual market strategy, serving both individual consumers and professional mechanics, is a key element of O'Reilly's success. This balance is interesting as professional service provider sales carry a lower gross margin percentage. The company's incentive plans include stock options for employees. As of the 30th of September 2025, there were over 8.3 million stock options outstanding with an average exercise price of $44.13. They granted new options this quarter and also had options exercised, indicating employee engagement. Let us re-emphasize the net income figure. For the 9 months, O'Reilly posted $1.93 billion, a solid 5% increase year-over-year. This is a testament to their operational efficiency and market position. Remember those increases in SG&A expenses driven by inflation. Well, their lease costs also play a part, with total lease costs for the quarter at $148 million. For the 9 months, it is over $441 million. These are significant operational overheads. Now let us touch on market risks. O'Reilly is exposed to interest rate fluctuations, especially with their commercial paper. As of the 30th of September, they had $590 million in commercial paper outstanding. A 10% hike in interest rates would impact their pre-tax earnings by about $2.6 million annually. That is not huge for O'Reilly, but it is a factor to watch. They also have some exposure to foreign currency, particularly in Mexico and Canada. The strengthening Mexican peso, for example, means their net assets there are worth more in USD, but it is primarily reflected in other comprehensive income, not directly hitting the income statement unless they sell those foreign operations. The company confirms its disclosure controls and procedures are functioning effectively, meaning they are reporting accurately and on time. This is standard but reassuring. As for risks, O'Reilly states there have been no material changes to their previously disclosed risk factors. This implies they are still facing similar challenges from economic conditions, competition, and supply chain disruptions as outlined in their last annual report. Here we see the details of their share repurchases for the third quarter. They bought back over 4.2 million shares for an average price of nearly $98 per share. This ongoing buyback strategy is definitely a major focus for the company. So, what is the big picture here? O'Reilly Automotive Incorporated continues to be a powerhouse in the automotive aftermarket. Their sales are growing and they are expanding their store footprint at a healthy pace. Despite inflationary pressures, they are managing their costs and delivering solid operating and net income increases. The share repurchase program is very active, and while their equity is technically in deficit, this is largely a function of their aggressive buybacks and can be seen as a strategy to maximize shareholder value. Their significant cash generation and strong credit facilities provide a good cushion for future investments and any economic uncertainties. However, the increasing complexity and cost of parts for newer vehicles, while boosting average ticket prices, also leads to fewer repair visits for DIY customers, which could be a concern for that segment's transaction counts going forward. Also, the rising interest rates on some of their debt is something to keep an eye on, though their overall debt levels are managed well relative to their earnings. In conclusion, O'Reilly is executing its strategy effectively, demonstrating resilience and growth in a competitive market. They are a company that knows how to manage its capital and return value to shareholders. What is your take on O'Reilly's latest financial report and what it means for their future? Let me know in the comments below. If you found this breakdown valuable, please hit that like button. It really helps the channel reach more people. And of course, subscribe for more deep dives into corporate filings. Don't forget to join the Discord linked in the description for ongoing discussions and a great community. Thanks for watching, and we will see you in the next one.